Welcome to Long Story Short, a podcast where two financial advisors, one rooted in financial planning, the other in investment strategy, break down the questions we're actually hearing from our clients. Each episode, we tackle one or two real-world issues that matter to high net worth individuals, from market-moving news to personal finance decisions with lasting impact. No jargon, no fluff, just clear, thoughtful insights from the front lines of wealth management. We keep it short, but we don't cut corners. This is Long Story Short.
All right, Adam.
All right, we're
This
here
is
live at Jackson Lake Lodge.
this is not a Zoom fake background. This is the real background you can see behind us.
This is the real deal. I think this. I've seen many, Zoom backgrounds in very extravagant places, but I think this takes the cake, and it might look familiar, right?
I think so. What was it? Just last month, the Fed had their annual retreat out here at the Jackson Lake Lodge.
At
I
the
always see the
Jackson Lake Lodge.
pictures. Yeah, I always see them with the pictures with these mountains in the background.
Yeah, and I always wondered what the history behind that is. And we went down a little bit of a rabbit hole last night. And I want you to share the story behind why the Fed comes to Jackson Lake Lodge. I had way more extravagant expectations on what that would be, but it sometimes it's just that simple. So what was it?
Yeah, no, it's definitely not what you'd expect out of, the Federal Reserve. But basically, they brought it out here just to try to lure Paul Volcker in the 80s to come join them at this annual retreat. Right? I guess they justify it by saying that they wanted a natural setting so they can have substantive talks about economic policy without having, to be in a major metropolitan city, just to be more relaxing to have conversations out here. But really, it's just that Paul Volcker likes to fly fish.
But yeah. Paul Volcker liked to fly fish, and that adds to his legacy as being a notoriously aggressive Fed chairman. He was the one who took head on the very aggressive inflation of the late 70s and early 80s, and it's notoriously known as like a towering mountainous man. And so it is very fitting that this region of the country would be something he favored. And this is also a day when we're going to get some news this afternoon, and it should be pretty interesting.
Right,
And we're here for it.
right. Finally, the the thing that some people have been waiting for a little while here. The Fed rate cut seems like it's coming. Um, what are we looking at? 25 basis points? I'm not really sure it matters that much.
Yeah, I don't think it does. And I think last year, it's been exactly a year. September 2024 was the last time, we did a cut. It was a more aggressive one, right? 50 basis points this time
Hmm.
last year.
Yeah,
And that was a great case study in market reactions to rate cuts because rates were cut and everyone thought immediately mortgage rates were going to be coming down. Just general interest rates in the economy would start trending much lower, but the opposite happened and rates actually moved higher.
yeah.
So um, definitely take a note of caution on any grand expectations for what's going to happen today. These things are very priced in. Market expects them to happen, and there's not always this direct correlation between the headlines and what happens with your money. But interesting to be here
Hmm.
on a cool day like that, nonetheless, and an
Yeah,
important moment of time winding out of all the COVID, post COVID inflation, and we're
yeah.
here for it.
We're here because this is where our annual company conference is every year. So every year, Bernie Company does an annual conference in different places, and I think we were attracted here much for the same reasons that Paul Volcker was, but also because of the significance around the Fed rate cut. So I think it's only fitting that we are here. I think that what does a rate cut mean, right? I think a lot of people kind of don't understand what exactly we're trying to do here, what the Fed's trying to do here. So just to recap, the Fed basically has a dual mandate. They want to keep inflation low and they want to keep the economy fully employed, right? And those two things are often at odds with each other. So lower rates stimulate the economy, they make borrowing cheaper. Companies are able to invest more and
Hmm.
ultimately produce more. It also creates a situation where like valuations that are higher can be supported, right? So that's why the stock market sees rate cuts as a favorable thing. But rate cuts could also cause inflation. So it'll be really interesting to see what the Fed does. There's been some weakness recently in the labor market, which I think has cemented the fact that the Fed wants to do this rate cut. And then we are seeing some signs of inflation, at least not getting back to that 2% Fed target, right? So, that's part of the reason why there's been some conflict between the administration and Jay Powell around the path of rate cuts, because the Fed's a little bit worried about inflation. They're also a little bit worried about jobs. And so they're trying to really thread a needle as far as, what is the right setting, what are the right rates for interest rates. So it'll be interesting to see what they do from here. I think the expectation based on market prices is that the Fed will continue to cut rates, but it won't be as aggressive as what we saw previously.
Yeah, and the expectation was last year that they were going to continue to do that.
Yeah,
So expectations do not always
they're
meet
going to be
reality.
data driven, right? And the data
Yeah,
changes. Yeah.
right. Yep. No, exactly. And I think this really translates well to a question we got this past week around the headlines versus the reality of what's happening underneath the surface. We had a really, really great point of feedback from the child of one of our longstanding clients, and it was a great point. He said, I love listening to the podcast. You guys are always presenting with data and the hard facts, and that doesn't match up to the negative. So, what I see in like the headlines in terms of like the negative news and the worries and the fear mongering that happens. So his
hmm
question was basically like, how do you strip beyond the headlines and actually look under the surface?
It's a great question. And it's something that I think everyone struggles with, right? Like in this day of algorithmic news feeds, like social media engines are just feeding you things that you're going to click on. And the
Yeah,
fact of the matter is that fear sells. And so oftentimes the headlines that you get, the push notifications you get to your phone, the things that you're seeing on social media are making things seem like it's worse than it really is, right?
right,
So I think there's a couple different ways you can go here. For one, I think it's really important to curate your news sources to make sure that it's people who are, in positions of power, right? Maybe they're putting their money where their mouth is. They're people who have a track record of being honest with their reporting and things like that, right? And so that can, obviously be a lot of different things, especially in this really polarized era. But I think finding people that are saying the right things. I think of guys like Morgan Housel on, he famous author. He has a good Twitter presence. People who are just going to be reasonable, no matter what, who's in power, which precedent it is, what news source it's coming from. So I think curating your news source and having like really trusted people works really well. But the other thing I think you have to keep in mind is the ultimate arbiter of truth is really the stock market, because it's
Hmm.
the ultimate in putting your money where your mouth is, right?
Yeah,
So have there been bubbles in the past? Sure, but you have to keep in mind that the current stock market prices are the combined opinions of millions of investors who, quite frankly, like, I mean, literally, I'm going to say this again, putting their money where their mouth is, right? And
right.
that's what's setting, the prices. So sometimes when the headlines seem so negative, but the stock market's growing, and making gains, I would trust the stock market over people trying to generate clicks.
Yeah, and I'll also throw in a shout out to the advisors out there as part of this
hmm
because, go back 20 years, 30 years, the role of the advisor was we were almost the gatekeeper of a lot of information. If you wanted to know about certain, at that time, it was really mutual fund driven, but like if you wanted to know what mutual funds were available, if you wanted to know what stocks you could or could not invest in, your advisor was the gatekeeper of that information. Obviously, that's changed significantly. We all can research investments on our own. Like you said, all day our phones are blowing up with information about what's happening in the markets. But now the advisor has gone from being the gatekeeper of information to being the interpreter of the reality of what's happening. And, now more than ever, you really rely on your advisor to look beyond the noise. It's almost like it's been a 180. You've gone from too little information to too much. And now your advisor is the one that's taking that information and processing it in a way that's unique to you and your goals. And we've seen that the past 5 years is a great, it's really a great example of that coming out of COVID and the COVID sell off, the inflation and interest rate hikes of 2021 and 2022, and even earlier this year with Liberation Day. Advisors now more than ever have been, the ones looking beyond the noise and presenting information in an understandable way that's not driven by fear, but more in reality.
COVID's a great example of the stock market not making sense. I think a lot of people
Yeah.
forget that the market bottomed on March 23rd of 2020. And if you recall, that was very early inning on the whole pandemic, right? So there were still millions of deaths to come. Lockdowns were going to drag out for months, if not years from that point, depending on where you lived. But the stock market kept making gains and going higher and higher and higher, right? So
Yeah.
that's a great example of what I'm talking about, where the stock market is pricing in what's going to impact valuations for companies, and it doesn't necessarily care about what the fear mongering, type headlines are going to be. I mean, because if you knew ahead of time back then that we'd be, locked down and that, the pandemic would drag on for as long as it did, you wouldn't expect prices to make gains, but they did. So I,
Hmm.
I I look at that similarly to where we are today. I think a lot of people are upset or concerned about the stock market being at all-time highs, and there's a lot of policy uncertainty, there's geopolitical uncertainty, there's all this uncertainty around tariffs and inflation, and now the jobs numbers are coming in a little bit weaker. But follow the stock market, because I think that's really going to be the thing that tells the true story of what's going on. I do like your point about advisors, being a great source of information,
Hmm.
because your advisor's been through this before, right? Been through market cycles, been through market crashes, been through markets at all-time highs. And our job is to help navigate those environments and ultimately keep you invested even when things seem a little bit scary, right? So I would certainly recommend that if you are concerned, talk to your advisor. A good advisor will be proactive and will be willing to put you at ease, while letting you know what's going on in real terms.
Yeah. Yeah. Love that. All great points. And I want to wrap this up with a practical tip, retirement related, because as I said, I think in the last episode, I've been going through a really exciting year. I think I've had 4 clients make the transition into retirement.
Oh,
So
that's awesome.
um, this is what we're doing here for this conference is something they're going to be diving into doing more regularly off the payroll. And one of the things, and I've had a lot of fun coaching people on, is the idea of replicating a paycheck in retirement. A lot of people spend so much time obsessing over accumulating the right amount of assets, hitting their number, knowing they now have enough resources to spend the way they want to spend. But then when it comes to actually doing it, they freeze up mechanically. It's like, okay, I have all these accounts, I have all this money. Now what do I do? And being out here with limited cell service and limited ability to connect with the outside world, I now have a newfound appreciation for setting up paychecks, or we call them, play checks is another term that's thrown out there in the retirement planning community around, setting yourselves up for a more regularly recurring income stream in retirement. So one real important practical tip is not to set yourself up in a position where every month you need to call your advisor or log into your account and distribute money. Kind of figure out a monthly budget or something close to it and set up a recurring withdrawal. Hit your bank account every month. So when you're out traveling, when you're busy, with kids or grandkids, and you're just enjoying all of your hard-earned money, not to also add a logistical nightmare on top of that, and just set up something that's more predictable, more steady. When you're on the road, you don't need to worry about taking any distribution, and your advisor can help you determine like where should that come from in terms of what account and when. If you've got 401ks, you've got brokerage accounts, Roth accounts, part of our job with the tax planning is helping you to decide not only how much you should take out, but where should that come from. So automate, automate, automate. It's the theme of the week. And hopefully the Fed's about to go into automation mode with the rate cuts so we can move beyond this into the next phase of an exciting economy with a lot of innovation happening.
Real quick, Adam, we saw a lot of wildlife while we were out here. What was the coolest animal you saw?
The bear, the grizzly bear, no doubt. Although I don't know, because seeing some of these like the bison, like the herds of bison up close, you really have no appreciation for how massive they really are. But seeing the grizzly bear in the wild, like 100 yards away, was a bucket list kind of a item. What about you?
Yeah. There's like kind of the dichotomy, right? We saw the big grizzly bear up close and personal. We also saw plenty of bull bison as
Yeah.
well. So, just like it is out here, it's a battle between the bulls and the bears in real life out here. Puts
Yeah.
it into
Well, we
perspective.
saw more. We saw more bison than bears. So maybe
I
that's
think that's a
the
good
bulls are,
sign.
the bulls are still leading the charge.
That's right. All right, Adam. Well, we got to get back inside.
Keep the great questions coming. Long story short, at Bernie, BURNEY.com. Thanks, everyone.
This podcast featured Adam Newman and Amy Pratt of Bernie Wealth Management, which is a division of the Bernie Company, an investment advisory firm. Adam is managing partner and is chartered financial analyst, certified financial planner, master of taxation, and retirement income certified professional. And Andy is senior partner and director of investment strategy and is a chartered financial analyst and chartered alternative investment analyst. Long story short involves general discussions of a broad range of current financial topics related to financial planning, taxes, investment, and retirement. This content is for informational and educational purposes only and is not intended as personalized investment advice or recommendation. It does not take into account your financial situation. You'll need to consult with a qualified financial advisor or professional who is familiar with your specific circumstances. Investing involves risks, and past performance is not indicative of future results. The Bernie Company is an SEC-registered investment advisor. Registration with the SEC or any state securities authority does not imply the Bernie Company or any of its principals or employees possesses a particular level of skill or training in the investment advisory business or any other business. Bernie Company does not provide legal, tax, or accounting advice, but offers it through third parties. Before making any financial decisions, clients should consult their legal and/or tax advisors.